Guys, this is Alex here. Today we're going to be discussing the short that I took on the S&P 500. As you can see right here, I entered on February 13th, 15:39 and 38 seconds and exited on February 17th at 6 a.m. 55 minutes. And we can see right here, I purchased the puts. The puts were for strike 4,130 and expiration for March 17th. And we're going to be discussing how I entered here and exited all the way down here at the bottom. And what fueled this move to the downside were, of course, the consumer price index numbers, the producer price index numbers, and news that the United States will default this summer unless Congress raises the debt limit. I entered this trade short on the overall market days before this was announced. As you can see here, timestamp on this trade, February 13th is when I entered, buy to open right there, the puts on February 13th at 15:39. And we can see right here, the first article was released on February 14th at 8:31 a.m. Eastern. Second piece of news was released on February 16th, 8:32 a.m. Eastern. And the final piece of, or the third piece of information that the market was waiting for to get a direction was on February 15th at 2:01 p.m. Source CNBC for all of them. So we're going to be discussing how I identified what the plan was for this trade and overall why I was feeling bearish on the market. So let's get into it. So I entered right here in this area of the 4,143 range. And we can see right here, this is when the CPI news released. And the reason why it spiked is because every single time these pieces of news get released, the market becomes extremely volatile, causing extreme moves to the upside or the downside. And for this particular piece of news, it was bearish. And what ended up happening was economists were expecting 6.2% CPI, and CPI ended up becoming 6.4%. Source CNBC, article released on February 14th at 8:31 a.m. Eastern, which is 5:31 Pacific time. As you can see here, I entered the day before that news was released. And again, for reference, this is the area I entered, the 4,145 range. The reason I stayed short after seeing the volatile movement all the way up to 4185 was because, like I just mentioned, the movement was volatile, and every single time news releases, you see extreme moves up, extreme moves down, all the way to 4103. And I stayed in short throughout the entire week because every single time we were expecting news to be released, I noticed that the market was entering into this area where there was a major seller. And at the same time, the major seller was present while the news was being released. There was the treasury yields were actually picking up a bid. They were catching a bid. And I realized that the reason they were releasing this news, the CPI, the producer price index, and the U.S. debt ceiling news was because there was someone here that needed that news in order to liquidate his position in this range, in the 4,125 range, all the way to 4,155. This is the area where his orders are getting filled. You can see up here, it got filled up in the upper 60s, but it was overnight, and we opened here, right here. Price went up, and this is actually where the producer price index news was released. And it was released here because we noticed price went up, and as the news released at 5:30 a.m. Eastern Pacific, 8:32 a.m. Eastern, it allowed for a lot of liquidity in order to fuel the move to the downside. And my strike, or the puts that I had, were for strike 4,130. And the plan was to exit the trade when the S&P 500 reached 4,060 or when the yields hit 3.91. And as you can see right here, I exited on the puts at 6:55 a.m. on February 17th, and we zoom into the chart, February 17th at 6:55 a.m. 1 minute chart. This is the exact moment that I exited right here. At 6:55 a.m., I exited right here, exactly at the bottom within 4,056 and 4,058. And at the same time, I was exiting from this short side move or short position. The yields hit 3.91, and that is the ultimate reason why I ended up liquidating my position to the short side. As you can see right here, timestamp February 17th, 6:55 a.m. Timestamp right here on the 1 minute candle on the S&P 500, 6:55 a.m. And we can see right here, just literally 1 minute after I exited the position, 1, 2, 3, 4, 5 minutes after, the market reversed from 4,055 all the way to 4,085. The reason this was a good plan was because as the yields were hitting 3.91, they needed a break before you could break out to 4.0. And at the same time, uh, the S&P 500 just was getting lots of the selling volume to the downside was reaching a new low, and buyers started coming in as the market was coming down. So I knew that it was a good time to exit the position, and that's exactly what I did. Exited 6:55 a.m. and got in at an average of 57.79545 per contract, and I exited the position for an average of 92.22. And if we were to look at the time of entry, which is right here, 4,146 was where I entered. If we zoom in right here, 4146 area, this is where I entered, approximate, and 4,146, 46, and then exiting here at 55, that I got out for an approximately 90-point move to the downside on the S&P 500. A 90-point move to the downside on the S&P 500 is approximate 2%, 2.5% move. So the reason, again, the reason why I entered in short was because I expected the news to all throughout the week to be bearish, which is exactly what happened. Inflation numbers, market participants were waiting for those to be released. Source CNBC. February 14th at 8:31, which is the day after I exited the position, or no, day after I entered the position, to clarify. The news released that inflation rose. Uh, Expected was 6.2%, actual was 6.4. Day after, the inflationary numbers released. The news that the U.S. will default this summer unless Congress raises the debt limit was released. And also the day after that, on a Thursday, the wholesale prices for the PPI increased, fueling inflation worries. All of this I got in days before it was all released, all because I identified that there was a major seller on the S&P 500 right here, which is where I entered, and then just rode the move down to the downside. And I exited literally at the bottom. Go back to the chart so I could show you again before I log off. And the plan before I log off here, the plan again was to exit when the yields hit 3.91 or when the S&P 500 hit 4,060. The only reason I knew that this plan would work was because I saw that this seller was liquidating his position every time the news was released. So basically, seller was waiting for bad news in order to sell. And this is a very bearish indication. And we can see right here, exited February 17th at 6:55 on a Friday. And then boom, right there, 6:55 a.m. For S&P 500 traded in a 2-point range, approximate over the course of a minute, and this is where I was liquidating my position. And after that, markets reversed approximately 30 points. And yeah, overall, that this trade, we had a good plan. Plan worked out. And this is the news right here: CPI, PPI, and debt ceiling news was the reason why the market fell. And to clarify again for the video, I entered in days before all the news was released this week. So overall, good trade. Got a 90-point move to the downside. These put options ended up becoming approximately 75 points in the money. And that is a phenomenal move because if you own the S&P 500 uh, or uh, you own interest in the S&P 500, you are able to exercise these and you could create more profit on top of already having contracts that are that deep in the money. So yeah, that's the play. And for the account overall, I am at $1,474,474. And to clarify, about 3 weeks ago is when I started this account, and I started it with 250,000. So I'm up about almost 500% on this account, all because I was trading in areas where sellers are present and buyers are present and catching the moves before the news is released. And for reference, I've been getting in on trades before Federal Reserve drop released news. I got in on a trade before the earthquake in Turkey was released. Occurred, and I also got in on earnings. I got in on earnings reports before the earnings were released. So yeah, this is how I've been doing it. Very profitable on the paper account. Just working. This is just purely practice, but yeah, uh, been able to predict the outcomes of events by identifying where major buyers and sellers are, and using the news. And I've been using the news as a way to enter and exit. I mean, not enter. I've been using the news as fuel to exit my positions, and have been entering days before news has been released. So yeah, that's the style. These are the results right here. Up a million, or up about $1.2 million. And yeah, again, over here, entered on, let's check this out right here, entered on February 13th at almost 1600, which was a Monday, and I entered about right here, 4,144, and exited all the way down here. And yeah, that was the plan. Exit at 4,060, and I waited for the news to release before exiting. And once the news was released and the sell-off occurred during normal market hours, it was just a perfect trade, to say nonetheless. And this is the result. This trade ended up netting me about $473,000 profit. And yeah, that's it. I've been using supply and demand, finding where buyers and sellers are, and have been able to catch these moves before news is released. So yeah, I hope you guys enjoy the video. I'll see you guys around, and I'll keep these videos coming to you guys. All right, have a good one, guys. See you around.